Welcome. You are listening to Purpose-Driven Wealth, the podcast for empowered investors. If you're an investor who is tired of playing the Wall Street casino, stay tuned. On this show, we bring on industry experts to discuss leading strategies to help you make empowered decisions with your hard-earned capital. And now, here is your host, Mo Bina.
Welcome to Purpose-Driven Wealth. I'm your host, Mo Bina. Today on the show, we have Elle Williams. Elle has over 20 years of experience in investments and corporate management. She received her bachelor's from NYU, an MBA from Wharton, and a master's from Johns Hopkins University. She has her level 3 certificate in wine and is pursuing her diploma with the Wine and Spirits Education Trust. Currently, she is the Director of Business Development at Vint. Elle, welcome to the show.
Hi, Mo. Thank you very much for having us.
Yeah, thank you for coming on. Why don't we start off by you sharing a little bit more about your background and how you became involved in wine and spirits?
Yeah, absolutely. So wine has always been a passion of mine, I think, since I was legal age to drink. I was lucky enough being in finance in New York on Wall Street to get exposure to some pretty tremendous wines early on. And that just changed my life. It's been a passion of mine forever, and mostly as a hobby. And I never thought it would become an actual profession or an industry that I could participate in, given obviously, again, the financial background. But I found a way to marry the two with Vint, which is in fact what we're going to be talking about today, and to be able to offer folks wine and spirits investing. So that educational background, which I know before we started the show today, we touched on it a little bit. There's a couple of programs that are global certifying bodies for sort of the credentials in the wine and spirits industry. And so I would be considered basically an advanced sommelier. So that's kind of what that level 3 means.
Yeah, thank you for sharing that. I was a little kind of like, before we started, I was kind of a little like unsure myself exactly what that meant, but after you explained it, it makes perfect sense. And it's nice to have someone with knowledge of the industry like yourself to actually talk about some of the things that we're going to be covering in today's discussion.
Thank you.
So wine and spirits investing is very unique. Can you talk about how the industry works and what are the supply and demand drivers?
Yeah, absolutely. It is unique. And that's why I think it's particularly compelling. Frankly, supply is a limited and constrained area. If you think about the very fine wines and spirits, they are typically only 1% of the wine and spirits that is produced globally. So we're not dealing with all wine that's out there. We are sort of selecting the very high end that makes it actually investable. So there's a few metrics that make these assets investable. And one of the key ones is scarcity. And that's a big component of supply, like I mentioned before. So if you think about some of the really top producers in France, for example, and if you kind of looked at a snapshot of the land itself, you'll see that these lands are surrounded by development, and they are really constrained in that sense. So those production and those opportunities are not increasing. So not only is it a scarce but land limited product, it's also a product that's consumed. So every year your supply goes down, while every year your demand goes up. So if you kind of look at that axis, you'll see how that drives an investment over time. Obviously, demand increases as the quality increases, which is a factor of the aging of these products. Again, you have your sort of holding period that people have to be compensated for. So for example, if you take a vintage today, a 2023, 2022 wine, and you put it away, you're holding that. There are holding costs of that particular product. And some commodities are not really compensated for that today. I know we see a little bit with gold out there, but wine is compensated for that. So for those of us that are storing these products and holding them over time and not consuming them, we're ending up with some appreciation there, not just because of the inherent characteristics, but also because some of these sort of intrinsic characteristics of these products.
Oh, great. You mentioned what, about 1% of what is produced globally is actually investable.
Exactly.
And so when you define something as fine wine and spirits, like what does the word fine exactly mean?
Well, that's what it means. You would be addressing these very high-end products. So, for example, it would be coming from a producer or a winemaker that has a very good reputation, has a long-standing quality attached to it. There would be factors related to the particular vintage and the harvest. There would be factors, again, related to demand trends from consumers. What are they drinking? What do they like? And all of these things drive really that high end. But again, the quality comes down to the production of these products and their ability to age. That is a key differentiator. Most wines and other spirits are not meant to age. They have a shelf life of 3 years or less. And I think that's something that a lot of consumers are really confused about, because they think if they buy a bottle that may be $50, $100 or more at the store, then they think, oh, this is a wine that I should put away, right? This is a big wine, I'm going to store it, and it'll be better in 10 years. And in fact, that's really not the case. Again, it's probably even less than 1% of wines that are truly investable, that can last for 40 years. And there are inherent characteristics of that quality of production that allow it to last that long.
Oh, interesting. I didn't know that. So when we're talking about non-fine wine, you mentioned that it doesn't have an indefinite or has a fixed shelf life. Does the wine itself, because of how it was produced or the quality of the wine, does it somehow degrade, or does it somehow get
Yes.
worse with time versus actually getting better?
Precisely. That's exactly correct. So characteristics of the wine itself allow it to age. This would be things like the acidity of the wine, which is, again, inherent to the fruit, inherent to the way that it is produced. And that is a characteristic that allows it to age. So a higher acid wine will age longer versus lower acid wine. There are many, many components, and I think we could spend hours going into what makes it actually intrinsically ageable. But that would be one of the actual characteristics. But yes, you are exactly correct. It is the characteristics of the wine itself that allow it to age. And most wines are not produced with that in mind. And again, that's not the winemaker's intention. They're making products for people to drink, to enjoy. We want to be able to go to the store, pick up something that's reasonably priced and enjoy it today, tomorrow, next week, whatever, right? Most people want to consume the wines that they're purchasing and not store them. And again, I would differentiate, you'll see this in the price point. For example, some of our bottles in our collections are $40,000 a bottle, right? This is not what you're seeing at the store. These are not the things in your grocery store. You're not going to come across them in the normal course of your day.
Yeah, that totally makes sense, right? People, when they go to the store and they want to have a nice table wine, that's completely different than, the type of quality and the investable nature of these fine wines and spirits that, we've been talking about. How correlated are these investments when you're talking about fine wine and spirits as compared to like traditional investments that most people may be involved in, like stocks and bonds and Wall Street related like investments?
Well, that's a great question, and one that's obviously pretty important and that we get asked quite a bit, because people are looking more and more to alternatives. And obviously wine and spirits would be a really key alternative because of the lack of correlation. So I'm happy to share with your audience some charts. I can send them to you later if they want them. But just quickly, I'll run through some of those correlations. So for example, it's negatively correlated to the S&P. So it's about as negative 0.5. It's also negatively correlated to bonds and real estate. It's about 0 correlation to gold. It's slight positive to commodities. So I think it tells you a little bit about these characteristics when you're thinking, how can I build a portfolio and balance that out? It's a really interesting asset for that.
Yeah, definitely. And what are some of the risks with these types of investable fine wine and spirits that people should probably be aware of?
Well, obviously, any investment comes with the risk of appreciation, right? There's no guarantee. I think in this case, what is interesting about this asset is, while we can't foresee the future, I think what we talked about earlier with supply and demand and their inherent sort of consumption and scarcity that's built into this, that has really helped to look as we go forward that there should continue to be appreciation to these particular assets. Again, as we look at supply and demand curves, and that's how that works. I know we didn't talk a lot about demand earlier, but I'll just touch on that here. So one of the big drivers of demand in this market is the demographics, global demographics. So first of all, increasing population, increasing consumption trends, increasing wealth. I know right now we're looking at, sort of an economic meltdown of sorts in various countries, but that aside, there is still a trend of lifting out of poverty and an opening of markets to more global trade. And that particularly brings in wine and spirits. So we can look at what happened in Asia starting in the 1980s. That has been a huge demand driver, and wine and spirits is just barely touching those markets. So yes, I see that appreciation is a risk, but again, I think there are inherent characteristics that help this particular asset. Another thing I would point out is that wine has been historically a stable asset, even during downturns. So I'll give you some numbers. For example, in the COVID crash in March of 2020, wine and spirits were down 2.5%. The S&P was down over 20%. So, that trend has proven. We've looked back to, about the past 20 years. We've looked at all of the downturns. Obviously, we've gone back much further than that, but I think the past 20 years are more relevant to the market today. And in the 2008 crash, same thing. The wine and spirits market lost only about 1%, and the S&P was down 37%. So I think, again, this is just a more stable asset, which has, again, some interest to investors in their portfolio when they're building out a diverse portfolio.
Yeah, for sure. I mean, having something that isn't as volatile as other assets out there, that dampening effect, definitely something that, people like to have. Everyone wants to have appreciation, but, when you look at certain other assets out there, for example, like maybe cryptocurrency or Bitcoin, you get huge appreciation, but you also have these huge volatility swings as well too. And sometimes people don't have the stomach, to deal with that type of volatility. But it sounds like that type of volatility doesn't exist within this particular market.
Yeah, well, what's been interesting is that, though I went through the fact that it's been a relatively stable asset during downturns, it's performed incredibly well over the past, few years. In fact, the whiskey index, and we have a couple of indexes which people can, look at. They're free, they're public. I would guide them to look at the rare whiskey index and the live X wine index, and they can look at various regions, various types of whiskey, and so on, so they can kind of see these numbers for themselves that I'm talking about. But the returns have been tremendous. I mean, whiskey over the past decade is up 420%, something like that. Wine isn't far behind that, but again, we break that down into whether it's champagne or Burgundy or, countries and so on. We can get into the details there, but very compelling returns. And also we've seen the stability, but again, I'd say if you're talking about risk and that's your key question, I think it would be that, everybody wants to have an appreciating asset, and obviously there's no way to really know. And then I would say liquidity. This is not a liquid market, no pun intended, but it is not. It is, and again, these fine wines and rare spirits, they do trade. They do trade daily. There is a decent volume, but it is nothing compared to the stock market and the other big markets that are out there. So I think people going into this need to have the perspective that this is more of a buy and hold over a medium to long-term kind of investment. And that's where they're going to see the positive impacts on their portfolio.
Mm-hmm. How does Vint work with investors, and what type of services do you offer?
Well, we have basically two products. So I think the key thing for people to understand about Vint is that we are a securities offering, a securities company, a financial firm. We're not selling bottles. People are not going to be investing in a bottle of wine or a bottle of whiskey that they can consume, that they can own. They will be buying shares in a security. And so that being said, we have two products that we currently are offering investors. The first one is our collection, which is on our site. We have a trading platform there where people can come, and as we release collections to the public, it's effectively like an IPO. So they can purchase shares. That is open to anybody. There is no minimum with the exception of the share price, which could be as low as $50 in some cases. So that's really a neat way for people who are not accredited investors, for example, to participate in this asset class. And that's been huge for us. I think we're approaching 70 or 75 collections at this point, and we have, over 10,000 accounts. So we've got a great track record there. It's a really easy to access and easy to understand product. The other product that we have is for our accredited investors. It is a fund, like a traditional private equity fund. So they can participate at a sort of larger scale. This is more for our institutional clients, for example, or at money managers and advisors, things like that. Basically, this fund is a more broad approach. So the collections, you can select what you want. Each one is thematic, meaning you may have a Napa cab, you may have a Burgundy, you may want to do a South American icons collection, or a Japanese whiskey, but you can pick and choose which ones you want and build your own portfolio. Whereas the fund is a broad wine and spirits sort of one-stop shop. So they're kind of two different products, two different structures, and geared for two different investors.
Oh, interesting. So the fund is only available to accredited investors, but
Yes.
It can be essentially customizable. Is that correct?
Well, the fund is not customizable. It's the one-stop shop. So that's a global wine and spirits. So you can come in and you basically have, I would call it kind of an index, if you will, like a market model is what we've replicated,
Okay.
that people can invest in and be done. They will be globally diversified. They will have all of the key assets, done for them. Whereas the collections you can pick and choose and you can build your own portfolio. And again, you do not have to be accredited, and the minimums are very small, which would be a single share, is perfectly possible for somebody to purchase.
Gotcha. Okay. So the fund has already been built and been put together.
Yes.
But an investor, whether accredited or not accredited, can actually create their own, if you want to call it fund, or let's say their own basket based off of spreading money into one or more of the collections.
Correct. Yeah. So as we release those, and typically we release 2 to 3 per month, they can purchase, and people have lots of different strategies, right? They may just love a particular thing, and they may just want whiskey, or they may want to buy a certain amount of every collection that comes out. It's up to them to kind of choose how they want to access this asset class. And then they do exactly that. So with each IPO of these collections, they'll purchase whatever they want, and over time build the portfolio that they're looking for.
Gotcha. And so within so in each collection, essentially your staff and Vint is essentially curating various fine wine and spirits within each collection. How does that process work in terms of figuring out what you're going to put in a collection?
Well, we have a team dedicated simply to sourcing and trading in these assets. So our director of wine is probably the best person, I think, in the world to do this kind of business. So we spent a lot of time looking for him. His name is Adam LaPierre. He is a master of wine. So he is, like I was saying earlier, the top of the top, where hopefully one day, maybe if I'm lucky, I'll get, but that's many years away. But nevertheless, there are, just for context, there's 300 globally. So it is incredibly difficult. There are more Nobel Prize winners than have ever been masters of wine. So it is a very difficult thing to achieve. And his background has been entirely in, this trade, right? Building portfolios for investment or building portfolios for large scale merchants and retailers. And so he leads a team both in Europe and here, and they're all 24/7 looking at these markets. And so I think that what they are looking for is trends, kind of understanding what's going on, looking at the harvests, the vintages, looking at what's happening with producers, all of these various things that we've kind of touched on throughout is what they kind of constantly dealing with and understanding that market. And then they dig into more, specific asset sourcing factors. So for example, I mentioned before brand power, that's historical reputation, a prominent winemaker, critical acclaim, the region. Is it a region that, is well known, well understood? Critic scores, believe it or not, those are actually pretty important drivers, and they do impact the value of these wines. I'm sure you've probably heard of Parker and his scores. There's many other ones out there, but that's what I'm talking about when I talk about scores. Quantity that's produced, that's another big one. Obviously, again, going back to initially where we talked about scarcity. Some of these producers do not even produce wine every year. In fact, some of them produce it every few years because they want to have the best wine. And if they don't, they just don't make it. The comparison, for example, we know Gallo, for example, they produce something like 75 million cases of wine a year. Whereas, Screaming Eagle, which you may have heard of, both of these are in California, they produce about 5,000. So quantity is hugely important in terms of keeping them into that sort of collectible, fine wine, investable space. So there's really a long list of factors that go into how we curate a collection. But I think, those are some of the big ones.
Thank you for getting into the details. That was actually really great to hear. Some of those things I hadn't even thought about, like, for example, like even just like the region in which, it's being sourced. So there's a lot of variables and factors that come into play in terms of assembling a collection. When it comes to liquidating or selling a collection, how does your staff figure out, or how do you figure out when a collection has come to the point where we've maximized, the potential return, or that we've maximized whatever our goal was that we set out to do by putting this collection together, and we've maximized that. At what point do you come up and say, okay, now it's time that we exit and that we sell that collection?
Well, I think, it's interesting. We don't really think about maximizing and getting to the highest point we possibly can. We're kind of investing on a curve, right? So we want to get into these assets when they're relatively young, relatively inexpensive. In some cases, we're also offering futures. So they're still in the barrel, right? Or in the cask in the case of whiskey. So we kind of run the gamut there. And so we want to stay on that earlier part of the curve because you're going to see more of the appreciation then and less risk. So if you think about when your drinking window is, that you want to have exited an investable asset before you hit that drinking window. And the reason is because after that, obviously it starts to deteriorate and the wines are just not as good. So clearly the value is going to become diminished. A lot of people think about investing in these sort of really rare or really iconic, like a bottle of Thomas Jefferson's wine. That's not what we're doing. While those are incredible and certainly high in value, we're looking at stuff that we can sell at a point on the curve where somebody can acquire it and probably still have some additional upside, or even some time before they would want to drink it if they're going to be the end consumer, because eventually these will be consumed, right? So that's the goal of all of these. And that ties in again to the demand thing. We didn't touch on this earlier, but who are our consumers of these wines? These are the ultra high net worth individuals globally who, really think of it as a luxury market. And I think, I'm sure you're on Bloomberg all the time and everybody else is, everybody's saying, oh, luxury, they're doing great. Even with this downturn, we expect that to continue. And that is true. I mean, I think that the people in the top category are still going to be consuming and buying, these kind of high-end goods. And so, we want to make sure we are selling them at an appropriate point where value is still there. So I would say, again, that's not like the maximal, most highest point you could get, but it's a good point when you're investing and trading in these assets. We are fielding inbound inquiries daily on all of our assets. Our assets are public. So part of our collections is that we are SEC qualified. And so I think that's another differentiating characteristic for Vint, is that we actually have gone through the financial regulatory process. We're also FINRA compliant. We have GIPS compliance, you name it. We're the only ones that have done that. And so as a part of that, all of our assets are public. And so we get a lot of inbound inquiries because people know what we're holding, right? So whether it's a merchant or a restaurant or a cruise line or an auction house, they are coming to us asking, for our products. And so we kind of look at that. We look at like what's coming in, where's the value there? Do we feel like it's a reasonable price point to, exit these assets? And I think generally we kind of have some hurdles that we've sort of internally guided to, where we definitely want to be at least 400 basis points over the relevant index for that product. And so, that kind of guides us when we're looking at a sale. But to be honest, we've really outperformed all the indexes quite significantly. Our 2022 return, again, net across all of our assets was about 30%. So I think most people are not seeing that in their asset base right now. So, again, the returns are strong and they're positive. Could we wait longer and maybe make it higher? Sure. But we also want to be more reasonable and realistic and capture that upside, when we think it's available to us and it's a good trade to execute on.
Yeah, and that totally makes sense too. It's like you just want to get the bulk of the meat off the bone, but if there's a little bit left on it, is it really worth, perhaps even like a hold time, right? Because you mentioned about hold costs earlier or holding costs. Yeah. And so like, you got to kind of weigh like, well, we may be able to get a little bit more in terms of value out of this, but is it worth the holding costs and so forth? Or that incremental increase in value that you get, is it really worth it? Because there's also risks too, right? Because trends can change. You talked about trends and tastes as well, and those can change as well over time. So I imagine that, at some point you're like, well, because we are in an industry that, where people eventually want to consume these items, that maybe they may not want to consume them as much at some point in the future. And so there's that in itself, I guess, is kind of a risk, right? So that trends and taste can change.
Absolutely. Absolutely right.
For people who are interested in learning more about wine and spirits investing, how can they do so?
Well, so I would encourage everybody to go to our website, which is vint.co. We have a lot of sort of industry information. We have white papers. We have, all kinds of resources on there for anybody who wants to dig in, really a wealth of information. I would also refer folks to the indices that I mentioned earlier. They have some write-ups on there. I believe some of those are free to the public. If you're really into it, you can always get a subscription and you get more data there. But the indices data themselves are open and free to the public, so they can kind of look at those numbers and get some information there. So I would really encourage them to do those two things. Those are going to be your most sort of unbiased and broad information sources. General, I'm happy to share more information about the wine and spirits market. We have sort of an investment guide where people can kind of look at, how do I access this asset in general? I would say there's really only a few ways to do it. One is through companies like ours, Vint, and fortunately for us, we're the only ones that have a security. So you can come in as a financial product, and you would do that through Vint. There are other companies that do offer investments in this asset, but then you would be investing in the bottles. And again, there's the upside there. You could always drink them. So there's a positive. But if you drink it, then you lose your investment, but pros and cons, right? But that's a different approach. Obviously, it's not a security. And then, you could invest in things like the real estate behind some of these assets. So for example, vineyard investing is kind of growing as an interesting space for real estate investors and other alternative investors. So there's things like that. There's lending products that are being developed out there now. There's some whiskey lending products where it's kind of like a futures type thing, but on the credit side. So there's a few different ways people can access that. I would encourage them to dig in. There's certainly stuff that they can Google and get some research on, but anybody's welcome to reach out to me as well. And I'm happy to share some of this information.
Oh, thank you for mentioning all that. And so I assume that if people wanted to learn more about Vint, then obviously just going to the website is where you would direct them to.
Yeah, I think that's probably the first best stop. Obviously, we're on all the social media platforms, so you're welcome to go there. But then we don't have the depth of really information if you want to dig into understanding this asset class on those platforms. But certainly, we're there, we're present, they can participate and interact with us. Our team is pretty proactive, so we are very responsive. You can go to our site and reach out to support. We definitely are responsive that way, or you can certainly reach out to me. And I'll share my info with you, Mo, so you can spread that amongst your investors and your audience as well.
Yeah, thank you. We'll include a link. We'll include those links in the show notes for this episode when it goes live. Ellie, in conclusion, is there anything else that you'd like to mention, or any last thoughts?
Yeah, I think one thing is just kind of understanding the difference between a security and investing in this as a bottle. And I think, again, this is what really differentiates Vint from any other approach. And I think it's not intuitive. I think it's a little bit difficult for a lot of people. There's two key points, I think, when you want to think about securities versus collecting in the traditional sense. Maybe you're also collecting by putting in your own wine cellar. And the difference is that you can invest with your IRA, believe it or not. It is a investable asset because it is a security. IRAs and other retirement funds are not allowed to invest in alcohol traditionally. That's an IRS rule in this country, at least. But because it's a security, they can access it through our platform. And I would say the other thing is sort of the leverage, the financial efficiency of doing it as a security is something I think people don't quite appreciate. So for example, our first 50 collections, if you had bought a single share, it would have cost you $3,200. Yeah, $3,200. And you would have a share of 50 collections. That would mean you would have a share in about 5,800 bottles, 5,800 bottles you would own a share of. If you wanted to do that from a bottle standpoint, so if you wanted to go out and buy one bottle of each collection, you would own 50 bottles and you would have spent nearly $1 million. So I think people just, when they look at the numbers and they see that, capital efficiency, it's a different game. It's not buying bottles. It's not doing a wine cellar. It's a completely different approach to this market that is truly scalable.
Yeah, the ability basically to have fractional ownership has many benefits. I guess maybe the best way of just summarizing what you said, right?
Yeah, that's exactly what it is, right? And I think people don't always see that when they look at this asset class and think about it, because again, we're still stuck on I'm going to buy some bottles and put them in my wine cellar, and then I'm investing in wine. It's like, well, not really.
Yeah, that's not really quite the same thing.
Yeah, exactly.
Well, thank you, Ellie, for coming on to the show today.
Absolutely, I enjoyed it. Thank you for the conversation. And again, happy to help anybody out if they have follow-up questions.
Yeah, thank you. And I really appreciate you sharing your insights with the audience. And that's all for today. And thank you, everyone, for tuning in. And until next time, have a great week.
Thank you for tuning in to this week's show. If you are interested in learning how alternative investments can help you build purpose-driven wealth, sign up on the High Rise Capital website to receive our monthly newsletter and free investor ebook. Lastly, if you enjoyed this episode, don't forget to subscribe and leave a 5-star review. Thank you for listening to Purpose Driven Wealth, the podcast for empowered investors.